Hello everybody, this is Lara with your end of the week video for gold for the trading week ending Friday 4th of September 2020. I expect the pullback and some sideways movement may be over and the upward trend may resume. That's what the first wave count expects. The next target is at 2180. I do have an alternate which looks at the possibility of a trend change, but for confidence that requires a new low below 1764.12. Elliott Wave analysis first, classic analysis last. The trend is up. We should always assume the trend remains the same until proven otherwise, and the sideways movement of the last 3 weeks looks like it may be a triangle pattern completing and an upward breakout may follow. This wave count expects that supercycle wave B is continuing higher as a double zigzag, so this is a huge counter trend movement, and when it's done, this wave count expects a huge big C wave to move below the end of the A wave, but we're not there yet, so for the short to mid-term this wave count remains bullish. The structure of supercycle B as a double zigzag has the first zigzag here in the double. Complete here, it's labelled cycle wave W. The double is joined by a 3 in the opposite direction labelled X. It subdivides as a double combination, and the second zigzag in the double is labelled cycle wave Y. It subdivides as a zigzag. A zigzag is labelled A, B, C, and it subdivides 5, 3, 5. And so primary wave C is expected to complete as a 5-wave structure. 1, 2, 3, 4, 5. If 4 continues any further, it may not move into wave 1 price territory below the invalidation point. Let's take a look at the daily chart for primary wave C, where it begins back down here, this point here, 1, 2, 3, 4, 5. It's also possible that 4 could have continued sideways as a triangle, A, B, C, D, E. We would be expecting exactly the same movement next though. So to give you a daily chart outlining intermediate 4 as a triangle at this stage doesn't make any difference. When we get up towards minor 3, 4 and 5, then it's going to start to make a difference. So what happens if we see an upward breakout above a triangle trend line next week may determine how I label intermediate wave 4. So for the very short term, this little piece of movement here, the labeling within it could change next week. For now, an upward movement is expected next week, no matter how I label this little piece of movement for this wave count. If 3 is over here, then 4 is over either here or here, and 5 should continue higher next week up toward the target. If 4 continues any further, it may not move into wave 1 price territory. At the hourly chart level, within this possible beginning of intermediate 5, 3 overlapping first and second waves may now be complete. An increase in upward momentum would be expected next week if that's correct. If intermediate 4 is continued as a triangle, and I have an alternate hourly chart for that, that also would expect an increase in upward momentum next week. When triangles break out, they do usually start with good momentum from the breakout. For this idea, if minuet 2 continues lower, it may not move beyond the start of 1. The target for minor 3 is a very short-term target. Minor 4 may be relatively brief and shallow. And here's the idea at the hourly chart level of intermediate 4 as a triangle. It could have continued a little bit lower on Friday, now to overshoot the lower AC trend line. The most common place for E waves of triangles to end is undershooting the AC trend line. The next likely point for them to end is with a little overshoot, and so it could be over here. I've adjusted this best fit channel to really contain all of it. Minor wave E. If upward movement breaks above the upper edge of this channel, then we can have a little bit more confidence that at least a short-term low should be in place down here. At the daily chart level, this wave count follows on from the first weekly chart, but it's seeing primary wave C as a complete structure. It sees intermediate wave 3 a little differently. It is possible there was a supercycle degree trend change a few weeks ago, and that a huge new downward trend may have just begun here. Intermediate 1 is the first wave within the new trend. Intermediate 2 could be continuing sideways as a zigzag, A, B, C. It's possible also it could have been over here as a double combination. For now, I'd expect C to move above the end of A, but intermediate 2 may not move beyond the start of intermediate 1. If we see a downward breakout from this small consolidation next week, then I probably would label intermediate wave 2 over here. A downward breakout for this wave count would see a third wave down underway, so it should have some fairly strong momentum. We can have confidence in this wave count only if we see a new low below this price point, which would invalidate the first daily chart. At the weekly chart level, this idea is very bullish. It sees the bear market for gold over here and a huge new bull market continuing, with the first wave over here, a second wave as a double flat, and a third wave as an impulse continuing higher, with primary 1, 2, 3, 4, and primary 5 extending, a fifth wave to end a third wave 1 degree higher for this particular market is very commonly extended. So this follows for this part of the wave count a common pattern. Intermediate 1, 2, 3, 4, 5. Let's take a look at this at the daily chart level, where intermediate 2 is this low down here, intermediate 3 seen as incomplete with minor 1, 2, 3, 4, and 5. It's also possible that minor 4 could be continuing sideways as a triangle. I would label that A, B, C, D, E, and would be expecting an upward breakout early next week from the triangle. Again, either way, it doesn't matter if I label minor 4 over here or here, with the expected upward direction next week for the first 2 daily charts. If minor 4 were to continue further, it could continue further and lower as some kind of combination. It may not move into wave 1 price territory below the invalidation point. At the hourly chart level, everything here is the same, it's just 1 degree lower. The short-term target is the same at 2180, an upward breakout is expected next week. The best fit channel is drawn the same on both hourly charts to reduce your risk. Possibly wait for an upward breakout of this channel with clear upward movement, at least 1 or maybe 2 full hourly candlesticks above and not touching this trend line of green candlesticks, clearly upward movement. At that stage, you may then have a little bit more confidence, at least a short-term low may then be in place. At the weekly chart level, there's been a few weeks of sideways movement. That has managed to bring RSI down from overbought, where it exhibited double bearish divergence with price at highs. It's brought stochastics back into neutral territory, but it hasn't been long enough to bring ADX down from extreme. It's still above 45 and well above both directional trend lines. And so if we do see new highs and upward breakout from this consolidation very soon, upward movement may be limited still by extreme conditions, and RSI isn't that far into neutral territory. It wouldn't take much for it to again be overbought, and then there may be triple bearish divergence. And so it would be reasonable to expect that either a big trend change has occurred back here, or more likely the sideways consolidation may continue a little bit further, or possibly if we do get upward movement, it may be reasonably limited given current extreme conditions at the weekly chart level. At the daily chart level, this sideways movement is now too long-lasting to be a pennant pattern. Pennants and flags are short-term continuation patterns. It now looks like it may be a triangle. We have to be pretty patient with classic triangle patterns, and the trend line sometimes need to be adjusted more than once, as I have had to in the last few days this week. Triangle patterns in classic pattern terms are either continuation or reversal patterns, and so an upward or a downward breakout may occur. And for a classic triangle pattern, we have to wait for the breakout before we know, obviously, which direction the breakout is, and the breakout has to be a day which closes beyond the triangle patterns. With an upward day, it has to have support from volume for confidence. For a downward day, it doesn't necessarily need support from confidence. It doesn't necessarily need support from volume for confidence, but it should be a clear downward day, and if it does have support from volume, that adds further confidence. As price is moving sideways, overall volume is declining. On balance, volume is at support, price is at support, slightly adjusted on Friday. It would be reasonable to expect an upward movement on Monday, and then look for resistance at the upper edge of the triangle trend line. RSI at the daily chart level is well back into neutral territory, and so there is room again for an upward trend to develop, but at the weekly chart level that may be limited. ADX at the daily chart level has been brought down from very extreme. It's now below both directional lines and below 20. And so there is again room for an upward trend to develop, but again, at the weekly chart level, it may be limited. But it could certainly happen. We could certainly see new highs, and that's what my first 2 daily charts are expecting, because we should assume the trend remains the same until proven otherwise. Because if we approach markets with that in mind, then we're likely to be right more often than we are wrong. We're not trying to pick highs or lows. That's all from me this week with your gold analysis. I hope all our members are having an awesome weekend.